Hello everyone, I'm Tyson Koska, one of the founders of OnTrajectory, and I hope our tool can both bring clarity to your financial future as well as help you achieve your goals. When you first log on to OnTrajectory, you're presented with 4 questions to quickly get you started. The first question is simply, what year were you born? The second question, how much have you saved so far? Enter a rough estimate of your total savings, including your bank accounts, investments, and retirement accounts. Exclude the value of your primary residence. Question 3. What is your annual income? Enter your gross income. That's the amount before taxes. How much do you save each month? Enter how much money you save each month, including for retirement. And that's it to get started. OnTrajectory will run a quick analysis, plugging in some assumptions about your income tax rates and retirement. But again, the goal is to tailor those assumptions to match your actual situation, and we'll point all of that out to you over the next 10 or 15 minutes. As you can see, we provide a to-do list to help you think about what a good financial plan should include. And don't get discouraged by the initial results. There's a lot of information we haven't added in yet. This is really just the starting point of creating your plan. Now, for those of you who are new to OnTrajectory, let me give you a quick tour. On top is a visual representation of all your assets over the course of your life. We start with $20,000 as we entered just a moment ago, and as you can see, it climbs consistently before starting to decline during retirement. To the right of the graph, you see the projected ending balance, which at the moment doesn't look great. But again, we're just getting started. On the bottom of the screen is where you enter the details about your income, expenses, and savings or investment accounts. Let's begin with entering our income information. Now, one of the first things you may notice is that we included Social Security, but I know that for many of you, that may not apply. What you do have, however, is a pension. So let's quickly rename this item and put a more realistic number in for your pension. Another item you'll want to include is your spouse's income. That's very easy to do. Click Add Income at the bottom of the screen and choose Spouse Income. We will then enter in their name and date of birth and click OK. The next step is to actually add their income and when they plan to stop working. As you can see, I'm using the letter R in some places. This represents retirement age, which you can change here for yourself and in the owner description for your spouse. I know that often folks like yourselves are able to retire a bit earlier, so we'll set this to 55. As you can see, your plan is looking much better now, with a much more comfortable ending balance. So let's move on to expenses. We always encourage folks to break their expenses into 2 categories. Basic recurring expenses that you will have with you more or less forever, like groceries, utilities, cell phone, car insurance, etc. We recommend grouping them together, which you can do either by listing them out item by item or simply by entering a dollar amount. The other types of expenses you have are those with distinct beginnings and ends, like daycare, college payments, a mortgage, etc. You don't want to include them in your recurring expenses because they won't be around forever, and they definitely affect your ability to save money. In OnTrajectory, we let you know what you're able to save in any given year based on your income and expenses, meaning you don't have to figure out what am I going to be able to save in 5 or 10 years. A simple way to come up with your expenses is to take a look at your last tax form. Look at your total income and subtract your income tax. This is your net income. Net really just means how much did I actually make. Anyway, subtract from that number whatever you were able to save during the year. The remaining number is your expenses. From there, simply subtract out non-recurring expenses, like a mortgage, to come up with your recurring expenses. Now let's look at how to enter those. As you can see, there is already an item called Basic Expenses. These were calculated based on what you said you saved per month, and since you entered your income, we were able to calculate monthly expenses. Also, notice that these expenses have 2 age ranges defined. This is a key part of setting up your financial plan, because many expenses and even incomes are likely to vary during different times in your life. The second age range here is from retirement until your trajectory end age, and it's about 15% less than your current expenses because folks often spend less during retirement, but obviously you can set this to whatever you're anticipating. Let's enter a new expense. Let's say you're planning to help with your child's college costs, which will be starting in 10 years. You are planning $15,000 for 4 years. Now, something that may have occurred to you when I was talking about recurring expenses is inflation. I'm sure you know from experience that things cost more now than they did 10 years ago and are likely to cost still more 10 years in the future. By default, all expense and income items increase with inflation, and that's based on the inflation rate located here. Now, let's say, for example, you think college costs will increase faster than inflation. You can simply click here to override the rate at which that particular expense grows and put a new value in. Obviously, an expense you wish to track separately can be entered in this table, and you can also leave gaps between age ranges. For example, here's how you would model purchasing a new car now and then another new car in 10 years. Let's move on now to the Accounts tab. Notice there's one account already defined. In OnTrajectory, you must always have at least one account so that there's some place to put excess income. Also, this account, which is always at the top of the list, is a bit special. We refer to it as the default account because not only is that the account that receives excess income by default, it is also the account that receives funds if you roll over or close another account. Think of this account as the place where, if you had extra cash, you would invest it. Maybe a mutual fund account, or if you're more conservative, a savings account. Although I would urge you to be a bit less conservative than that because the interest rates on those accounts are near zero at the moment. In any case, this is also where you define your effective tax rate, which is the rate used to tax your income. We pre-populate the rate based on the income you entered when completing the initial 4 questions during setup. But you definitely want to revisit these rates, particularly if you are married and your spouse has income as well. To calculate your effective tax rate, go back again to your last tax form and find out how much you paid in taxes and divide it by your total income. This is referred to as your effective tax rate. Notice that like your basic expenses item, this account has 2 age ranges. The first from now until retirement, the second from retirement until your trajectory end age. Also notice that both the percent growth and the percent tax rates are different between these ranges. That's because most folks move into more conservative investments during retirement and also have a lower effective tax rate in retirement. Why? Because they're not earning as much. To change the rate, simply click in the percent tax column and change it here. Note that there is also the Automatically Calculate option. If you choose this option, OnTrajectory will calculate your federal effective tax rate based on your total income and gains. If you use this option, however, be sure to add in your state income tax rate here, which I believe for Colorado is about 4.6%. I'll finish up the tax discussion simply by saying that everyone's particular tax situation is different, and you should talk with a professional for personalized advice. Now, I also understand many of you have a 457B account. I want to quickly demonstrate how to add that and define your contributions to it. Just click Add Account, choose 457B, and a new item is added here. Enter your current balance in the Starting Balance column, and then click the button in the Contributions per Year column to enter your contributions. You can enter both what you are personally contributing as well as your employer match. Since we are using percentages of salary, you also have to select which salary we're using. Click OK, and you're done. Obviously, if you have other kinds of accounts, you'll want to add them as well. As you can see, we have many for you to choose from. An item that I expect a lot of folks probably have is a home, or maybe even a rental property. Let's go through adding one of those. Select Home, Rental Equity, And now we have to fill out a few details, particularly if you have a mortgage, which of course most of us do. First, we enter starting equity. This would be the amount of equity we had day one when we purchased the home. For example, if you put down a large down payment, then you have equity in the property right away. Fees at sale represents your expected closing costs when you sell the property. And this checkbox should be checked if the property is not your primary residence. There are tax benefits when you sell your primary residence that do not apply to rental or vacation properties. Next, we'll enter our loan information: original loan amount, the number of years on the term of the loan, the interest rate, and whatever year of the loan you're in. So if you purchased the home 5 years ago, you would put a 5 here. This is necessary to accurately calculate how much equity you currently have in the home. Finally, enter in your mortgage here. This should include escrows and insurance if they are rolled into your mortgage payment. By entering in your mortgage here, OnTrajectory will automatically create an expense item for you. And that's it. Just click OK to complete setting up your home equity item. Notice that by default, we set the end age out 30 years. You should change this to whatever age you plan to sell the property. One final note: the amount you see added to your trajectory is not the total value of the home, but rather the equity you have, which increases over time based on both increased value of your property, but also the equity you build as a result of paying your mortgage each month. Now I want to return to something I mentioned previously. I stated that your default account accumulates any leftover income after expenses are paid and contributions made to your accounts. In other words, we assume that if you didn't explicitly spend it, you will save it. By doing it that way, you don't have to think about how much you will be able to save each year in the future. We calculate that for you. However, some folks prefer to assume that instead of saving excess cash, they'll spend it. To make that change, go to the main menu and select Calculation Options. You can choose to save either just a portion of your excess cash or none at all by unchecking this box. I'm going to leave it as is because I want you all to be good savers. Now let's talk about chance of success. This represents the chance that you will not run out of cash before your end age. We can see currently this plan has a 100% chance of success. But what if you plan to spend more during retirement? Let's increase your retirement expenses bringing your ending amount down considerably. If we rerun your chance of success, we see that the odds have decreased, meaning there's more of a chance that you'll run out of money. I personally urge folks to shoot for at least a 90% chance of success, but consider that even in a group of 10 people who all have 90% chance, the odds are that one of them will still run out of funds. In other words, the higher this number, the better. One of the really nice things about OnTrajectory is you don't have to answer questions or understand financial concepts that don't apply to you. If you have a relatively simple situation, you can keep it simple. If you have a more complex situation, we've also got you covered. And you can learn about all of our full capabilities by clicking the main menu, choose Support, and open our Guides and Videos link. From there, you can find much more information than what I've presented today. The final thing I want to say is that a financial plan is not something you do once and forget about. Why? Because your financial life situation is definitely going to evolve over time. But not only that, how will you know that any of the assumptions you've made when you set up the plan are accurate? Well, you can find that out by coming back every few months or so and tracking your progress. All you have to do is go to the Accounts tab and enter in your actual progress here. Then you can compare that number to the calculated balance that OnTrajectory thinks you should have. But don't react too quickly, because markets tend to behave in a very choppy manner. Sometimes they dip and sometimes they get overheated. The key is to track your progress over time, and if you notice that, for example, your growth assumptions were wildly high or low, then you can adjust them accordingly. Well, that's it for now. I wish you all great success in your financial future, and I hope you find that OnTrajectory helps bring you some peace of mind, as well as the insight to achieve your financial dreams. Thanks for watching.